A big hello and a warm welcome to Asset Monk's Investor Awareness webinar. Investment decisions are typically difficult ones, where you need to understand different factors like structure, risk involved, returns, security, tenure, liquidity, etc. Now imagine real estate investments, which add an additional amount of anxiety on the investors with so many factors to consider, broadly grouped under the term due diligence. As an informed investor, you should be paying attention to the information and the processes and should be fully empowered to make an informed decision on the asset quality and the risks involved. To dwell further, Asset Monk is in conversation with Purnima Kamble, a partner at the Hyderabad division of Fox Mandal, one of India's oldest and full-service law firms. Hello, Purnima. Thank you for taking your time out and joining us in this investor awareness seminar.
Thank you so much, Apurva. My pleasure to be here. It's a very important topic and I'm happy to contribute in whichever manner I can.
So before we delve into the deeper questions, can you give us a sneak peek into the spectrum of work you get involved in personally and the array of legal services taken up by Fox Mandal?
For having me here today. It's an area of great interest to me and I'm very happy to contribute in whichever way I can. To your second question, Fox Mandal is one of the largest law firms of the country and one of the oldest law firms. We provide just about all services that are required to buy a corporate house during their life cycle, right from the initial inception of incorporation, assisting with strategy, market entry, etc., right throughout the life cycle, including matters like corporate joint ventures, real estate acquisitions, leasing, project finance, and unfortunately, fortunately, each corporate house also has to face litigations and disputes. Could be alternate dispute resolution mechanisms like mediation and arbitration. So right up to the end stage of a corporate life, if at all that is faced by any corporate, like you're winding up or any assistance under the IBC. As a law firm, we take care of just about all the various activities. We have a very robust team across the entire country with very strong offices in Bangalore, Chennai, Hyderabad. We have in Ahmedabad, Mumbai, we have a very good practice in Mumbai as well. We've got a network across the country in Kolkata. We do have our associates in Delhi as well. Now, when it comes to my practice, I have been in Hyderabad for about 22 years now. Almost 22 years. Before that, I was in Delhi with Khaitan and Company. I was working with them and looking after Supreme Court litigations. After coming to Hyderabad, I've been involved in a lot of real estate matters. Kind of work that comes to you is across the spectrum. I would say I've become like a jack of all trades.
Fantastic to hear about the width of knowledge you have and your own personal expertise in this industry. So let's get started on the questions. How do you think the real estate sector evolved over the years from a legal compliance point of view?
I can tell you that the evolution of compliance is very, very prominent. One can actually feel that, this area which always needed a lot of hand-holding, a lot of compliance-related hand-holding, a lot of transparency, is now getting its due. Over a period of time, now that everything is getting digitized, your records, land records have been sanitized to a large extent. You can rely more on the land records that are available now because most of them have been put online and it's easier, A, to access them, B, they are much more, there is a level of sanitization that possibly has happened before they have been brought on, online, because obviously some check would have been done internally. So records in that sense are much more transparent. B, when it comes to real estate transaction, with the advent of laws like RERA, etc., for home buyers, it's become much easier now to deal with the so-called earlier, entity of the developer, which was people were very fearful of. I would say it's not just a compliance related thing. It's also making sure that the ethics are set right in this, in the real estate field, and also a sense of closeness, or rather the two very important stakeholders are being brought closer in a transparent way, which is in the residential space. And when it comes to corporate real estate, I think with the larger players coming in, with grade A buildings coming in, And the investors coming in wanting a huge amount of transparency with REITs coming in, there's been a sea change of the level of compliance that is needed. Various other types of buildings also, developers at different stages, so that transparency has to actually trickle down to the smallest developer or this built up space.
Regulations and ethics have made the industry so much more transparent and easy for a potential investor to enter the market. But due diligence is still sort of a dreaded topic for someone to even think about venturing into this industry. So, with regards to that, what does the entire process entail?
So, due diligence, I completely agree, is the backbone of any deal that is envisaged. Now, what is this due diligence? We need to understand due diligence is not just about seeing the sale deed or the one title document. A title document does not just say that, in India, our records have not come to that stage as yet, where you see the title document and you say, yes, the land belongs to him. Yes, a title document creates a right, and the conveyance happens under that document, under the Transfer of Property Act. There are multiple other things like possession, like which largely one should see the mutation, payment of property taxes, etc., construction of the building in accordance with the sanction plans. It's not just about, so for example, if you're buying a building, but if that building is not correctly constructed in accordance with the sanction plans, you may get title to it, but the building will always be an unauthorized construction to the extent that it has deviated from the sanction plans. And then the authorities will have the right to take action against that. It'll impact your usage. If the building, the title is there, but it is not, the usage is not correctly, the intended use of the building is not permitted because it's in a zone where that is not permitted, or the permissions don't allow that. If it's a commercial building in a residential zone, or the vice versa. So many aspects need to be seen. Just purely by seeing one title document, one cannot say that the building is, the title A passes, and B, the building is fit to occupy. Now, here I would pause and say market has evolved. Market has matured quite a bit. I think all investors are aware. Even the smallest of investors, actually, or buyers, come to us and say, please look at this document and look at the linked documents. We always tell them, if you're buying, what is the risk appetite? If you're buying for personal use, you're going to buy it, own it, and be in it for a long time, you're going to invest a lot in that. Better to do a proper title diligence going up to 30 years or 60 years. But if you're going to be taking on lease, and if it's a lot of investment going in the lease, you're looking at another 5 + 5 + 5 kind of model where it's going to be renewed and you're going to carry on for a long time. Again, adopt the same model, treat it as a conveyance. It may be a lease for you, but treat it as a conveyance. Go back in time and see at least 30 to 60 years of, how the title has passed. What are the risks that you may run? And third, of course, is that, diligence in any case is very important, because if you want to get a loan, you want to get any sort of financing on that, then banks will definitely want that. And today that's becoming increasingly important.
So for an investor to verify if the due diligence process is being done in a proper way, is there a checklist that, they should have in mind, and, just keep checking if all those, criteria are being met?
Yes, absolutely. Well, there is no central checklist, or there's no authority which gives you a checklist, etc. I do personally feel that is something that should be done over time. But then you look at ARERA, or you look at any of these, so it becomes a sort of an inherent blessing, saying that the land is, the title should largely be clear. For example, an SEZ premises, or a ARERA approved premises, if it's a if it's registered with the RERA. Usually they will go through the entire title flow and everything and see it's in order or not. But then if the building is under construction, has the building deviated from that, etc., all those things need to be seen. So there is no real checklist as such. Every law firm like ours has their own checklist, and largely they are similar, because the standard, whatever is needed to identify title, is usually similar. So I'm assuming the checklist can always be provided by any law firm that you're approaching. And we always advise, that take the checklist first, let that checklist be as broad as possible. Let the owner or the seller come and say that, these are relevant, these are not relevant. If these are not relevant, why are they not relevant? You'll get a better picture of the property as opposed to giving a smaller truncated kind of checklist.
So this entire, burden of due diligence currently is being taken up by companies who are into, providing real estate investment opportunities to potential investors, especially new timers. So, but is there a way that an investor can decide what is a trusted agency or what is the right authority? Will this company do the correct form of due diligence for me? Are they going to follow the entire process? Is there any way for them to verify a trusted source for this?
So trusted source, of course, you have to trust your lawyer. That's to begin with, and go for the right lawyer who has the experience in the market and who understands real estate well. That is the first trusted source that you can get. But of course, you have a lot of property agents, who are internationally acclaimed, who are also in the market. And I would say they are equally reliable because they see, when you are coming to a bigger organization, our reputation is at risk as well. So when we are conscious, I'm not saying fearful, but when we are conscious of the fact that our reputation is important, we ensure that all ethics are maintained and we take steps all in the interest of our client. So, then once you come, you sort of trust us and we take it forward to you, to your, requirements. Now, when it comes to the other aspects that I mentioned to you, the SEZ registration, the RERA registration, these can all indicate towards the health of the premises, depending on what you're buying. But of course, eventually, and sometimes people say when they're getting allotments from the government, they say land is coming from the government, so it should be cleaned. But then these are all known to get litigated at times. So it's always better to get a proper diligence done for any kind of land that you're buying. Because at the end of the day, you're creating a perpetual asset. If you're taking on a lease, you're also creating a very strong asset because you're going to be investing in it. You're going to be either staying in it or using the same. And there's so many other things attached. So please take your real estate investments very seriously and do a proper diligence, get the right people, and no harm in investing a little in your diligence. It saves you from a lot of trouble later.
So, from your experience, what are some of the complications that arise as a result of improper or faulty due diligence?
For example, once a land is acquired, when you have bought the land, then you are the title owner. And then once you have bought the land, any litigation coming after that, you can't simply shy away. You will be the party that will be litigated against. You may have an indemnity. You will run after the other person, but that is again you running after the other person. So in the absence of proper diligence, you can't go to court and say, no, I bought it, it's someone, even if you're a bona fide buyer, you are the buyer and you have to beware, you have to be very careful when you're buying the assets. So you have to sort of, in the absence of diligence, you have to live with the pains that come with the land. Then if there is any non-compliance with any of the statutory requirements, all liabilities are yours. If there are penal consequences, if there are pecuniary sort of fines or penalties that come, all those will be your headache. So it's better because once the person who's selling to you has got the money and has given you the land or the building or the land and building, however the case may be, then you are the buyer, you are the person who has stepped into that person's shoes and you will be liable. Of course, there are other legal concepts to look into, but those are only based on the facts of the case, and the facts and circumstances differ from case to case. So as a general rule, I would say, please be careful because otherwise you need to live with all the pain points that come up as a result of title issues or construction non-compliance issues, etc.
So, on a scale of 1 to 10, what level of risk do you think the investor is taking if no due diligence is done, or if there is no attention paid to the entire process of due diligence?
10. I mean, even to hire an employee today, we do background verification. So, when you're investing in a one human resource, you do background verification. When you're investing in your own asset and you're going to be probably using that asset for years to come, it only makes sense to do background verification. Diligence is nothing more than that. It's background verification, ensuring that it is what is promised to you.
So initially in our conversation, you had mentioned that reforms like RERA have increased the transparency of this entire industry. So, what impact did RERA have on the industry? If you can give us some deeper knowledge about that, because initially there was some resistance to this law, but what changed eventually, and now how has it actually helped an investor?
Right. So RERA has changed things, or rather is changing things in a very, very big way. Developers were always feared of earlier for the lack of transparency, the lack of accountability. And I'm not saying all developers are bad. I'm not saying that, they're fantastic, responsible developers also. But what happens, a few, put a shadow of doubt on the rest as well. And many times, because of the delays in construction, which may well be beyond the control of the developers, but sometimes developers have also been very, have not done what they should do in the right manner. And many home buyers have been left stranded. And, issues like these have been faced. We cannot deny this has been a very unorganized sector, and lack of accountability, lack of responsibility, lack of transparency has really given it a bad name. With the advent of RERA, that to a large extent, that is stemmed now, in the sense that, you'll see cases happening where home buyers have all gone to court. They've been able to sort of get their due, get their money back, get the developers to sort of address their concerns. RERA, on the other hand, is also ensuring that the timelines are met. Whatever the developer is going to give is promised and is put on the website. The home buyer knows exactly what they can get or they will get. And if there is any, if they don't get what has been promised, then they have the recourse to go to court. And RERA also gives certain, what can be done under such circumstances. So basically, at the end of the day, RERA is ensuring that whatever is promised, that promise is delivered to the buyers. There was no overarching sort of, regulator who was ensuring this fact that, there is a promise made and that promise has to be given as it is made. RERA, in an essence, is doing that, and there is a whole structure framework built around it in terms of the Act, and implementation of the Act is also duly recognized how it will be done. So I think to a large extent now, home buyers, real estate investors are secure to the extent that the RERA Act is overseeing how these projects should be taken forward. And in fact, very recently, if I'm not mistaken, there was a Supreme Court judgment which also said that RERA will apply to ongoing projects as well. So that is also, so you can see the kind of the essence of the Act. It's a special Act. It is meant for a special purpose. So they are being very broad in their implementation.
Since RERA, have there been other important reforms that came up and made this entire real estate sector better?
So when you talk about reforms, I will not say reform, but there's a lot of there's a lot of coming to sort of recognize the problems that are there in this industry, and those problems are being addressed. So, for example, the REITs that are listed on the exchange now, where all the grade A buildings are all pooled in, and some of the developers have listed their vehicles, special vehicles, where these properties are all pooled in, and they are the managers of those properties. And that's a very, very positive way forward in commercial real estate, because what again used to happen was the same problem of lack of transparency, lack of delivery of promise. Now coming under the SEBI purview, they have to be transparent, they have to be compliant, because now whatever they get, they have to distribute to their unit holders as rent. So now investors are more comfortable. There can be more foreign investment participation as well. Investors now know that the developer they are dealing with is accountable under law, has to be transparent. Whatever is happening is known to the investor. So now the whole profile of investors is changing. While in the beginning, when we talked about investors, we meant people who are buying. We never talked about strata investment or things like that. Strata investors were also there, but that was a very unique community. It would be just a few friends and family, and they would buy, and then they would also face problems because when the whole big building was being leased out to somebody, how were the strata investors going to be dealt with, things like that. If there was a sale, how would you get one person to come and sign? Then the whole sale would be stopped because of that. So these problems, I've dealt with so many myself, where strata investors have not been in sync with the conceived plan, and that led to a lot of issues for the buyers. So all those are now getting structured, and in a structured manner, smaller investors, even up to 2 lakhs of rupees or even 50,000, if I'm not mistaken, can come up and invest in these REITs. I'm not sure what the amount is, but what I'm trying to say is small ticket investments are also possible. Participation of the common man in big grade A buildings has been, permitted in a way through this. So I think this is a reform in itself. I mean, while it's not saying that there's a big reform in the like with an act coming in place and things like that in corporate real estate, but then there are addresses a lot to a large extent, and smaller reforms like these, allowing wider participation of investors, I think is a very welcome change that is happening. Then I would also like to mention the judicial thought process. There's a recognition, if you see the recent orders that have come from the various courts, there's a recognition of the fact that in the smaller investors, customers, home buyers, they all need to be protected, and therefore this whole thought process that is changing is going to put pressure on the developers to ensure that they stick to what they promise. At the end of the day, when you look at everything, at the end of the day, message is very loud and clear. You have promised something, you have to deliver it. If you don't deliver it, you are accountable. So I think that's a huge change in itself.
From a smaller investor's perspective who want to take advantage of the smaller ticket sizes that are being possible now, what are the typical problems faced by them in this commercial real estate market?
Again, a trusted partner. So if you're not going for the REITs, etc., and you want to invest in a standalone building, or you want to invest, you don't have that much to buy the entire floor yourself. 5-6 people come together and buy. The trusted partner, guidance, lawyers, ensuring diligence is right. The reliability of the title that is given to you. There are titles and titles. There are title reports and title reports. So you have to be, the title reports have to have that blessing of somebody who you can rely on. It needs to be blessed by your understanding of the technical aspects of the building are, again, very important, because if you're buying a standalone building, for example, how old is it? What are the aspects that need to be seen? What is over how long are you going to get your money back? Many things like these have to be looked at. And for that, if you are partnering as friends, it's a different thing. But if you're going out there wanting to partner with others, not knowing who to partner with, I think finding that one right partner who will do all this under one umbrella is what is a challenge. And I think those solutions are also coming out now.
So it's a known fact that commercial real estate assets involve huge amounts of capital. So is there a different way that these assets are, vetted? Is there a process that is different for institutional investors as compared to retail investors who want to invest in commercial real estate?
So capital investment, of course, a lot of things have to be seen. If you're buying something for yourself to live there, then it's a whole different sort of ball game. You're looking at the locality. Location is key, whether it's residential, whether it's commercial. Location is a key for any sort of investment. So to begin with, I think that is one of the things that somebody would look at very keenly. But from a capital investment point of view, for residential, it goes in a different thought process. For commercial, it goes in a completely different thought process. There you look at the ROI, the rate of return, the return that you'll get over the next 10 years, how long it will take for you to break even, when are you going to get your capital invested back. Those things are looked at possibly. I'm a lawyer, I'm not the I'm not the real estate service provider, so I can only tell you from the little experience that I have by seeing others and understanding how it works. But from a residential perspective, it's more on your use. What are you going to buy it for? Is it a first home? Is it a second home? If it's a second home, what is it that you're expecting from it? Is it for personal use? Is it for renting out? Many other things come into play. So you at the end of the day, it all boils down to finding that one right partner who can guide you.
As someone like you who has, who has been in this industry and has a lot of expertise in this industry as well, and from your experience, what are some risk mitigation strategies you suggest investors should know about?
Biggest risk mitigation strategy is finding the right partner. So, do your study well, find the right partner. Remember, sometimes right partners are not coming in that easily. You may have 5 people saying, no, stay away from them, possibly because they have their own vested interest or agenda. Keep all that clutter aside, go to a few people, get some background information, understand your partner, and get the right partner, because at the end of the day, it's the right partner which is most important to guide you truly about what is good in your interest. Could be legal, could be from a commercial standpoint, from real estate, completely as a broker. Make sure you have the right people. Second is, of course, make sure that you do the proper diligence, a thorough diligence. Don't cut corners in these things. These are most important. I have seen people cutting corners in these things and ending up in a problem and then regretting later. It doesn't help. A little bit, a little spent now can save a lot in the future. So I would say get the right partner, do the right exercises, your technical diligence. I'm not just saying legal, your technical diligence, your compliances, you should see your title diligence. All these other things need to be seen. It's very important that you're satisfied from that perspective, because what you're going to buy, you're going to live with it. Your indemnities and everything in the document are only going to come into play when there is a problem. And then you are responsible to get those things, because you will have to run after the seller. Seller will not come and say, yes, I have an indemnity and I will give you the money. It's always a dispute situation. It's always a situation where you have to run behind the person and get those breaches remedied. That is, you would prefer not to have those headaches later. Start now, be careful, make sure you make do the right steps now. Of course, problems can come up anytime. We are all human. There can be some errors here and there. But at least as long as you've done everything that you should do when you're making a big investment, to a large extent, you can have a sigh of relief that maybe largely you are safe.
So, from a legal perspective, when do you think an investor should walk away from an opportunity? What are some major red flags that an investor should figure out?
So to begin, I would answer that question first by saying the investor needs to be aware of their risk appetite. Once they know what their risk appetite is, it differs from organization to organization, individual to individual, culture to culture, right? So if you're aware of your risk appetite, I can go this far and no more, or you're willing to sort of, largely a lot of Indian companies are willing to sort of take on the risk, or they are willing to work towards mitigation. They are willing to live with the risk. But then at the end of the day, identifying the risk becomes important. So once you have invested in your diligence, you have identified technical risk, legal risk, whatever the risk may be. Once that is identified, then you need to map that risk and see what fits into your risk bucket, risk appetite. First bucket is no risk. Second bucket is mild risk, low risk, can be mitigated. Third bucket is high risk, but still can be worked around it. And fourth bucket is absolutely red flag. It is a risk. Do I want to live with it or not live with it? In my practice, this is what I have started doing, because I've realized that no business can be done without a risk. So once my client knows this is the risk, these are the 4 risks, this is how I can mitigate each. To what extent you could be liable, you could not be liable, what devils you have to live with in the future. I try to identify them. You cannot identify all of them, but whatever best you can do, and try and remedy as much as you can. If or any of these, how a person perceives, how it fits into your risk matrix becomes very important. And then based on that, take your call. If it's a complete it's a high risk and you don't want to sort of even go down mitigation route, then that's a call you have to take. But the moment you see a red flag and there is nothing that can be done, understand the repercussions of that. If you're comfortable with the repercussions, that's a commercial call you have to take. If you're not comfortable, you need to walk away. This exercise has to be done fast. And now I have started another very step 1 before this. I always, the moment my client comes and says, I'm interested in this property and I'm beginning to negotiate, I said, why don't you get me the three, basic 3-4 title documents? So I can just have a preliminary view. And if there is a red flag, I'll let you know upfront so that, you know mentally, because you won't waste too much time. These things take 3 to 6 months. By then you'll have other opportunities which will be lost. And the market is dynamic, rentals are escalating, your occupancy levels are going down. If you are in a grade A building, spaces may not be available for you to expand in that building, things like that. So, some people may want additional hard options kept in their building because they may have future expansion plans. All those things will not be available to them. So keeping all that in mind, the risk mapping has to be done well by your agencies who are doing your diligence for you, guide you in such a way that you can take a call very fast, expeditiously, and swiftly.
Lastly, Purnima, from a legal point of view, what are the 5 things investors should know about the real estate market, Indian real estate market in 2022, or what do you think are the changes that are going to come way forward also?
From a legal perspective, I think there is nothing major that is changing as such. But the whole transparency that is coming in, I think, is going to continue to grow. I think InvITs and REITs are going to be the order of the day. I'm sure in the next couple of years, you'll see more of these happening. It's in fact going to be a very pleasant change because more and more participation of smaller ticket size investors can happen in a very transparent manner, in an organized, in a well-regulated environment. So that's a huge win for the small investors who earlier could not participate in grade A buildings of huge developers. It was very difficult. So that, I think, both for the investors, the large investors, the foreign investors, the smaller investors, home buyers, all these steps that are being taken by the government, by the authorities, in making sure that the transactions become seamless, the transactions become more transparent, and there is an accountability attached to it, regulatory compliance related accountability, I think is a change in itself, and it's only going to get more and more robust. One more thing, with the increased digitization, with the records becoming digitized, and with the authorities looking at those records very keenly before they are put online, I think a large amount of sanitization of records will also happen, and the availability of all these records, technology like blockchain, etc., will. I'm hoping some state will make sure that registration happens in real time through the entire blockchain technology, and I'm hoping all those things will also happen over time, and we will soon be in a position where, with the click of a button, one just has to click a button and will get the entire title history. One doesn't even have to go through very cumbersome due diligence processes over the years. I'm hoping this is going to happen someday, but I don't see that happening in 2022. But on a positive note, I would like to say that the industry is changing. Real estate industry is evolving in a big way. The governments are taking keen interest in making sure that it becomes transparent. So I think over the years, you will see that change. It'll become a more lucrative option of investment not because of the way traditionally India has looked at land, but because of the way land is positioned, or land records are positioned, or the ease of doing business is happening in the real estate industry.
Thank you so much for sharing your experience and expertise with us on this webinar, Purnima, and answering some very pressing investor questions that arise in this market when you're going to invest in a commercial or any other real estate property from a legal point of view. And again, due diligence is a critical process to keep in check with. And once again, thank you so much for your time with us.
My pleasure entirely, Apurva. I'm very happy to contribute, as I said earlier, in whichever manner I can. This is a very important topic. Thank you.
Thank you.